So lastly, we have a presentation from upcoming IPO McArthur Oil and Gas. McArthur Oil and Gas is a company focused on the exploration and development of its Australian oil and gas projects. To tell us more, we are joined by Executive Director Brad Lingo. Hello, Brad.
Hello, Jane. Thank you very much for giving us the opportunity to present McArthur's story.
No problem. Let me pull up your presentation.
Thank you, Jane. McArthur Oil and Gas is an IPO and demerger of the existing Northern Territory, Northern Basin assets of Armour Energy. The McArthur corporate snapshot. McArthur has a commanding position in the McArthur-Beetaloo basins, which is a primary location of the Commonwealth government's focus on the gas-led recovery. We have the largest contiguous acreage position in the McArthur-Beetaloo, covering over 96,000 square kilometers, with an NT-focused experienced board and management team. Very large exploration potential, with over 4.6 TCF of conventional resources and over 28 TCF of unconventional resources. What's unique about McArthur is that we do have multiple proven plays, both conventional and unconventional, providing a world-class opportunities. We already have existing discoveries of low CO2 conventional gas in a proven Coxco dolomite play fairway, which is unique to the McArthur position. That provides the company with an early mover development potential of conventional gas discoveries, supplying into existing local gas markets right within our acreage in the Northern Territory. We have very low drilling and development costs at circa $3 to $6 million per conventional well. And we are positioned to be a fast follower in the unconventional. And we believe that this all coming together provides a very compelling valuation on a prospective resource on a terajoule per market cap basis for the proposed IPO. So our strategic vision is really based on three horizons: to be a conventional leader, leveraging off of our existing conventional assets and conventional discoveries with early production and sales, establishing a market presence into a high premium price energy market, and to be in horizon two, to be a fast follower with our unconventional resource potential, and to leverage both of those together with exploration and development success to be a large-scale producer of both unconventional and conventional natural gas resources. So McArthur is also unique in, I guess, our focus, vision, and values. When looking back at the last 10 years worth of history in terms of oil and gas exploration and development in the Northern Territory, we would see that the primary risk has been not the ability to find hydrocarbons. The hydrocarbons are being discovered, they are being appraised, and now they're ready for development. The biggest risk has been that social license to operate. And so our focus as McArthur is to be focused on proving up the commercial potential of the greater McArthur and Beetaloo basins, both conventional and unconventional, and to become the Northern Territory's leading gas explorer and producer. And we see delivering that through our value proposition of respecting the people and environment in which we operate, delivering what we promise, and integrity in everything what we do, and a commitment to quality and execution, and establishing and maintaining quality relationships with all of our local stakeholders. So our distinctive position is that we do hold these material interests across multiple proven and prospective basins. Our acreage covers a significant conventional and unconventional play fairways with pervasive, thick multi-TCF unconventional shale gas sequences with potential for stacked conventional and unconventional pay. But uniquely, we hold exclusively within our acreage the proven Coxco conventional play fairway in the Clyde subbasin, where we've already demonstrated exploration success. We have put together a board that really speaks to the quality of the asset proposition and the demerger and IPO that we're putting forward. Unique to McArthur is that across our board and our management team, we have been involved in every single bit of acreage in the McArthur Beetaloo, either technically or commercially, over the last 10 years. Our independent chair, Greg Martin, has come on board, has a long history with the Northern Territory, following in his role at AGL, and as the chairman of the NTCAS pipeline. Jeff Barker, our non-executive director, is one of Australia's leading unconventional resource experts, and recent executive general manager at Beach Energy in charge of development. We have two Northern Territory-based directors, Karen Green and Ray Hall. As I mentioned before, we're first and foremost on maintaining our relationships and delivering what we promise within the territory. And we think having directors on the ground will keep us very, very oriented and have a finger on the pulse of exactly what we need to be doing to deliver that mandate, deliver our activities in the Northern Territory. In terms of our proposed management team, Andrew Logan, Jeff Hoken, from an exploration and resource perspective, have been at the coalface, so to speak, on the McArthur Beetaloo for the last 10 years. They have been in all of the acreage, both from a technical perspective and new venture development perspective, that sits within the McArthur portfolio, within the Empire portfolio, with the Tambridge portfolio, and with the Origin and Falcon portfolio. David Spring, very experienced chief operating officer. And to complement that team, we're very close to announcing the appointment of our full-time permanent CEO, who is one of Australia's leading explorationists. Again, as I've highlighted, that commitment to that social license to operate is first and foremost, and we've embedded that all the way at our board level, with the establishment of a risk and ESG subcommittee to make sure we keep that first and foremost on our mind, with a focus on sustainable development and carbon management all the way through our exploration and development process. And we do have those established relationships. This acreage has been a core within the Armor Energy portfolio since 2012, and we've maintained those relationships, which McArthur will inherit. That will allow us to deliver the work programs that we are outlined in this presentation and move through the exploration phase and move through the development phase on our existing discoveries. We have independently certified prospective and contingent resources by Netherland and Sewell & Associates, the global leader in independent certification of petroleum resources. NSAI also provides the same independent estimates for peer companies, so they're very familiar with the resource plays across the McArthur Beetaloo. So I've talked about this overlaying footprint of our conventional and unconventional plays and the stacked play fairways. We have the Coxco and Reward Dolomites, where we have existing discoveries that sit immediately adjacent to and uniquely adjacent to the existing markets and pipeline infrastructure in the McArthur Beetaloo, and which is unique to the McArthur acreage. Overlaying and interbedded within that conventional play is the proven Barney Creek Shale, the very first unconventional shale gas play to be drilled and flared gas to surface in the McArthur Beetaloo. So our conventional targets, there's this very well-developed play fairway along the Emu Fault Zone, where we have multiple discoveries and multiple undrilled prospects. It is a prolific fairway, and it was first recognized through mineral core drilling by Emeco all the way back in 1979. When we zoom in, you can see the proximity of our discoveries to Glencore's McArthur River Mine, where we have our Glide gas discovery, where we have pending applications for retention licenses, is part of the next stage toward developing that discovery. We have existing discoveries at Glide, Cal Lagoon, and Lamont Pass. We have over 60 undrilled prospects and leads within this fairway at very shallow depths, with a prospective resource potential of 2.6 TCF, which is a very big number in the gas game. In terms of those unconventional plays, you can see on this stratigraphic column that the Barney Creek Formation, we actually have to drill, that is our principal unconventional initial play. We have to drill through that to get to the Coxscoe. So we have a significant opportunity to delineate, explore that while we're targeting our primary conventional objectives in the Coxscoe. So that source rock sits immediately adjacent to our conventional plays. It is a shale that is directly analogous to the prolific Utica shale gas play in the northeastern part of the United States. Looking at that gas, the Glide gas discovery, I mentioned the Amoco 1979 core hole, the Glide River 9 mineral core hole. Much to their surprise, they were drilling for copper zinc occurrences along that Emu fault zone, and they made a gas discovery. It was such a good gas discovery that it flowed at 6 million a day of unconstrained gas flow, and flowed at that rate for over 6 months before Amoco could come back in with the appropriate equipment to plug and abandon that well. In 2012, Armour came back and re-drilled that accumulation and reconfirmed the discovery and flow tested that well at 3.3 million a day, which is quite a healthy gas flow rate. What more importantly, it flowed near sales quality gas with negligible CO2 and the potential for hydrocarbon liquids to add to the economics. We have a fast track commercialization plan for the Coxscoe play fairway and the Glide gas discovery, using a virtual pipeline solution with skid mounted and modularized LNG and CNG production facilities that we can put directly in the field, and to truck that gas out directly into the pipeline infrastructure and directly to the McArthur River Mine, which is quite a significant market in terms of both volume and revenue potential. Our proposed work program is very much focused on delineating that play fairway post the completion of the demerger and IPO. Move to the next slide and we'll talk about the work program in Gantt chart view. You can see it's quite a robust program, all focused on delivering first extended gas production in middle of 2022, with a view of achieving first commercial gas sales from the successful appraisal of that existing Glide gas discovery by early to mid 2023, when the Glencore McArthur River Mine gas contract is up for renewal. We will have quite an active drilling and seismic program, and we've already started the regulatory process to execute that program starting post the IPO demerger. So what are we aiming to deliver out of the work program? To prove up the overall extent of the Glide gas discovery, but converting contingent and prospective resources to reserves, to mature that to production and establish its commerciality for development with a view of having commercial gas production in early to mid 2023. On the conventional exploration side, we want to prove up the gas resource potential at the Cal Lagoon, Kilgore North, and at one additional Coxscoe Dolomite prospect, and mature the prospective resources to contingent. We've acquired a very significant, it's actually the largest privately acquired airborne survey in the Northern Territory. And we're going to be using that data when we receive it next month to refine the leads and prospect inventory to define the next batch of exploration activities, both seismic and drilling, and to follow up as a fast follower in the unconventional exploration by appraising and testing those stacked shale plays associated with the conventional drilling program, and also to test the deeper shales as we deepen the Cow Lagoon and Kilgore North wells. So how do we compare to our peers? We think we compare quite favorably. We've got the largest contiguous acreage holding, second largest acreage holding in the entire McArthur Beetaloo. On a prospective resource basis, very comparable to that of both our peer empires and Tamarind Resources, which recently IPO'd. Where we think we have the real advantage is the comparative well cost, because we can focus on the conventional. And then when we really show that strength of comparison, it focuses on those demonstrated flow rates that we've been able to deliver. So we're getting much more gas per well at a lower cost with a much higher flow rate. And when we look at the implied in-ground value on our proposed IPO capital structure, we will be the true value proposition. We'll have the lowest well costs, we've had the highest flow rates, and we're putting a value proposition to the market that we are leaving significant opportunity for capital appreciation for investors in McArthur post-IPO. So our investment highlights: we have that commanding acreage position. The NT Minister has approved the transfer of the permits out of Armour into McArthur. We have that established social license to operate. We uniquely hold the proven Coxco play fairway with sales quality gas and liquids, offering us the potential of offering an early mover advantage in commercialization. Equally, we have the exploration of an unconventional plays as a fast follower based on the activity around us. We have a large independently certified prospective gas resources. Our retention license applications provide us that potential for first gas to market in early to mid 2023. We have clearly identified markets with a priority on the Northern Territory first, as part of our overall support from the government to drive and maintain our social license to operate. We're utilizing an early production system to deliver that early commercialization through a virtual pipeline through the use of skid-mounted CNG and LNG technology. We have a board that is very focused on and committed to ESG to maintain that social license to operate. And it is an experienced board and management team with significant industry, financial, and technical, geological, environmental experience, absolutely critical to deliver this program. So our cautionary statement, we do have, in advance of the IPO and demerger, there is a pre-IPO investment opportunity. And if you're interested, you can contact Michael Pegum or Ben Callanan at JB Advisory through Jane Morgan Management to find more about that opportunity. Thank you very much.
Thank you, Brad. Thanks for the great presentation. And yes, if anyone is interested, please feel free to reach out info@brokerbriefing.com. We've got a few questions for you though. So I know you did touch on this in the presentation, but what news flow can be expected following the IPO? And can you please elaborate on the IPO timeline?
Well, the first, we've been relatively active in terms of news flow over the last 4 weeks because we've kicked a number of major goals. First, getting the ministerial approval to transfer the licenses to McArthur. The fact that we'll have a news flow coming out about the renewal of the licenses for an additional 5-year term with no acreage relinquishment, which is quite a good. We've been able to deliver initial approvals that will be able to execute the demerger on a tax-effective basis. On a go-forward basis, we've announced the board and main construction of the management team. But I think the next big announcement will be the appointment of our full-time CEO, who's going to be the driving force behind McArthur and its exploration program. In terms of additional news flow, it's the completion of the pre-IPO funding, and then moving into delivering a Pathfinder prospectus that we can share with prospective investors, as we also move to the appointment of JLM to take the IPO forward.
Well, Brad, exciting times. I'm looking forward to being involved and seeing what we've got coming up.
All right. Thank you very much, Jane. It's our pleasure.